Hello everyone, this is Ryan Mallory with SharePointer.com. Today is December 19th, 2012, otherwise known to my 4-year-old son as 6 more days until Christmas. I'm starting to see where in some of the bigger stocks where volume is dropping off. I think as we get closer to the end of this week, I think the volume will get less and less. Um, it's not noticeable at this point, but you can see here like 30 minutes to go in the day, the volume's not probably going to be above average before the close. um, S&P, this pullback doesn't worry me at all. I think it's actually needed. I put the Bollinger Bands on for today's video just so you can see that we were overextended going into today. If we had finished outside of the upper Bollinger Band, meaning like anything in the green today, I would have probably sold the majority of my positions. Instead, I just sold Lulu for about a 6.5% gain. I sold it at 77.65. It's come about $1 off from those highs. That's why I did it. It started spiking. Even though I like to hold these stocks for a longer period of time, I'm not naive enough to think that they will go up forever. So as much as I don't want to get out of the stock, I'll still do it just because I knew this stock was getting overextended in the short term. Let's go ahead and get right to your stocks. First one, URI. You know, when I look at this stock here, it's got some support at like the 20-day moving average. Not from a long-term perspective, but just of late, where for the most part it has bounced off of it throughout the course of this month. I don't know how strong it is though. If it, you know, on a hard selling day, if that 20-day moving average would really hold. Nonetheless, though, it's got some overhead resistance. Just going from like when you look at these highs that were made in early April, it's going to be testing those, but I don't think it's really strong resistance. So there's a chance that once, you know, this, you know, light volume pullback in the market that we're seeing today is done and over with, that this stock will once again march higher. I don't see any reason to short the stock from a daily perspective. On the 5-minute chart, it's definitely rolling over quite nicely. You can see this nice rounded arch there. Volume has been pretty much average. It fell off until this week here, where the volume actually picked up some. Overall, I think it's more for day trading than it is in this particular case for swing trading. Let's look at some other ones here. ARUN. Now this is a stock that has some potential. Okay, you got a double bottom here. You got, you know, the first bottom, and then you got the second bottom. You got a nice neckline where we've broken through it back in last week, and we've pulled back a little bit. You could almost say that instead of it being a double bottom, you really have like a cup and saucer, cup and handle pattern setup here. So my ideal entry on this would be, and it's really sort of ideal right now, but it's closest to this $20.54 level that you can get in, the better. I think right now this is a simple pullback. I don't think it's anything of major concern. You also have a trend line you can go off of for your stop loss, so be cognizant of that. So if I was to get in it today, I would say put your stop loss at 2033. Entry either like at current price or as close to 2054 as you can get, because I do expect this neckline and this breakout level here to hold on a run. So good looking chart. Not a bad one at all. VHC. Okay, so this is a breakout. If you were in it yesterday at the close, you said to yourself probably, this thing looks like it's ready to move, because just drawing the trend line off of these highs, it held it. Now some will say that this trend line probably needs to be adjusted some for the price action we saw from yesterday. So I would agree with that and not use the previous downward trend line from before. Instead use this mark, connect it to here and to here, and you have essentially a new breakout level that this stock needs to get above. At this point, I would say your ideal entry is 36. assuming it doesn't break out today, and the earliest would break out is tomorrow, 36.27. So it's about $1.50, $1.41 off. You could put it below this rising trend line here and just keep increasing it as each day passes. That's probably the best way to go, though you're going to probably have to use a little wider of a stop than what you might prefer to use. Overall, it's a pretty good one, but you need to let this stock come to you. 36.27 would be my ideal entry. JCP. This stock has been hammered of late, and I'm glad you guys brought this up because there is a setup here that to be aware of. It's having trouble getting over this 50-day moving average, but once it does, you'll see that at that point it will be breaking out of this box consolidation here. So there's your consolidation. It needs to break out above that, but don't jump in just because it gets above that level. Get into it because it clears this 50-day moving average, which it tried to do today, and then it came right back down to earth. So the ideal entry is if the 50 days at 21.19, it's probably going to be around 21.25 once it gets to that level. So 21.23 to 21.25 would be your ideal entry on this stock. Volume is a little bit higher than the previous 2 days of selling that it saw. I would put my stop loss at kind of a hard one to determine at 21.23. That would be almost like a 5% stop loss. So you're looking at probably about a 4.5% stop loss if you're going to play that off of a break of the 50-day moving average. Overall, it's a nice setup. Has a lot of appeal to it. TRV. All right, so this one here, it has supported in the 8-day moving average. You can see here it's tested it numerous times. Closed below it here, but gapped the next day on a bullish kicker note. Tested it again back on Friday, so it's testing it today. It's found some buying support, as you can see here by the 5-day moving average. Went straight down to it, and the buyer stepped in. 30-day moving average paints a nice picture of sideways consolidation, so let's highlight that. So the theory would go is that once it can break above that level, let's say 74.45, that's where you want to get long at. I put my stop loss a shade below the 8-day moving average at around, actually let's be a little bit more liberal with our stop. Let's say 73.08 would be your stop loss and 74.45 would be your entry. Looks good though. I do like it from a long perspective. If be very wary from this stock from a bearish perspective if it breaks below this doji pattern here at 73.04. That would get extremely bearish for that stock, which is why we put the stop loss at that point. TASR, excuse me, I'm finding a little bit of a cold, by the way, so that's why you hear me with a little bit of a raspy voice. Actually, it's more than a cold, it's more like a flu, but son comes home from preschool, gets me pretty darn sick. You got a head and shoulders pattern here. Left shoulder, head, small head, right shoulder, sort of a goofy looking right shoulder, but it is one. Not all head and shoulders look the same. This is a prime example of one that fits that description. Below 754, the bottom is going to fall out from underneath this stock. That also coincides with a shade below the 50-day moving average, which it has found support at in the past. And you know, this might be one way to play this stock would be, okay, you think that this is the top of the right shoulder, so you're going to short it here at 821 and put your stop up at like 850 or so. That would give you a little more than a what is that, about 29 cents, so 28 cents. Yeah, it's about a 3% stop loss or so. And you could cover it once it tests here because it could find support and bounce back higher, or try to hold it through there. Two ways to play it, but overall not a bad setup. I can see what you're seeing there with TASR, and those are the two ways that you could play it. ACUR. Be careful with this one. I would say this is a stock that you don't want to play. Yes, there may be some resistance or support here that it might try and find before the end of the day, but at 250. But this is a stock you really don't want to play around with. It's only down 2.25% today, but if you look at some of these moves in the past, this is a highly volatile stock that you can't really predict on a day-to-day basis. So, and the volume's dropping off considerably. Only 189,000 shares traded on $2.50 stock. That's not something that you want to have any long exposure in. So, short side, you're probably not going to find any shares for it, but even if you did, I would say stay away from it because you don't want to be squeezed like the people who are shorting it at $1.45 faced when it went up to 246. FLEX. Okay, you got a little bit of a rounded bottom here, but I'm not really seeing anything that really excites me. It looks like a jumbled mess for the most part. There's not like a real clear price action on this stock. 620. You know what? Let's pass on it. The only thing it has really going in its favor is the strong price volume. Outside of that, I wouldn't touch this thing. Okay, you know what? I'll draw one line here. It has broken the downward trend line. Okay, but outside of that, if you were going to get into this thing, you needed to be in it back on like 582, 580 or so. So let's just scrap that stock and move on to another one. FSIN. Okay, I mean, you probably have like a mild trend line going here. Upward channel. So what you can see here, okay, I'm going to zoom on it some. There's not a lot of there's a lot of overhead resistance on this channel here. It's bounced off of it multiple times in the past. And so when it gets up to that 949, 950 level, it's going to start hitting that resistance again. So there's more room to fall than there is to go up. I wouldn't trade this one at all to either direction because for one, there's a lot of news messing around with this stock, and you know, it's been very bullish of late. Not a stock that you want to get short in. And finally,
Okay, folks.
Let's look at ABM here. All right, you got what is this, like a quintuple bottom? 1, 2, 3, 4, 5. 5 times it's tested this bottom. This is a huge bottom play right here. Okay, so you got a huge base there. It broke out. You had a downtrend from before. Let's draw that. All right, so it broke out back in the mid 18s, a little bit, maybe like 1870s or so. It broke out, and now it's consolidating just above this 8-day moving average, which I think is good. Let's play this one if it can break the highs from yesterday. So that would be at 2051 that you would want to get long at. That would also coincide with a break of the 200-day moving average, which I don't think is really significant with this particular trade. In fact, outside of the last few days, it has struggled some to stay above it. But as long as you kept risk tight, I mean, you could probably play it. I would put my stop loss somewhere around $20.10, get long at current price. And if it works out for you, it should be a nice trade. This little consolidation looks really good. It's kind of like a bull flag pattern. And let me draw it here. So it just needs to break out above. You know what? Let's scrap the bullish flag idea. It's just a nice consolidation on that 8-day moving average. So 2034 would be your entry, or you could wait till it clears yesterday's highs at 2051. But if you get in at 2034, you keep in risk tighter by keeping a stop loss at 2010. All right, that's going to do it for our broadcast. If you have any questions, feel free to hit me up in the Splash Zone chat room, where you can ask for me to cover your stocks in future videos. All right, so long for now. God bless you, and Merry Christmas.